Okay, so you've got two sheets in front of you. One of which has just got a cash flow forecast on. The other one has got some headings. So what I want you to make sure is when I'm talking through this, you do write something for each one of these headings. So what we're going to look at today, we talked about different types of expenditure. We've talked about different types of income, i.e. revenue. What we now need to look at is how a business looks at creating what's known as a cash flow forecast. So remember for P1, you were given those accounts, and one of them was a cash flow forecast. So when you say forecast, what is a forecast? What does the word mean?
Looking at what's going to happen.
Future, what's going to happen, like a weather forecast. The key is it's a prediction. Okay, it's predicting what the business thinks will happen, but it's based on some sort of extrapolation of data. It's based on some sort of truth. They can't just make it up out of thin air. As we said before, if a business is going for a loan, if a business is trying to get more investment, then the investor is going to look at, and the bank manager is going to look at, this cash flow forecast. So first of all, what I want you to have in front of you is the sheet with the definitions in. We've talked about income from sales. Revenue income, that is, isn't it? Income from day-to-day activities. That's the key. Income from sales. Income from day-to-day activities. So it could be your interest, it could be your dividends, it could be Jay on his phone. It's interest, so it's revenue made from your day-to-day activities. And in terms of this, it's your revenue made, your income made from sales. Okay, so that's the first one. Expenditure. What does the word expenditure mean? We've talked about this. What does expenditure mean?
Is it what you spend?
Yeah. It's money leaving the business, isn't it? It's expenditure. It's money going out of the business. So when we think of a cash flow forecast, we have a few subheadings. And it really is as simple as it says on the board. Cash inflow is money entering the business. So that could be capital income or revenue income. Doesn't matter which, but it's money entering the business. Cash outflow is your expenditure, your capital expenditure or your revenue expenditure. So it's money leaving the business. So just as we think of revenue and costs, and when one's greater than the other we get profit or loss, in terms of a cash flow forecast, we think of it in terms of positive or negative. So if our cash inflows are greater than our cash outflows, we have a positive cash flow. We have a positive net cash flow. So what we want is more money entering. It sounds obvious, more money entering our business than is leaving it. However, if we have greater outflows and inflows, we have a negative cash flow. I.e. there's more money leaving the business than is coming in. What you're going to notice throughout this is there are going to be months when that happens. There is going to be a month, say, I don't know, it might be January or February, when you've got a lot more money leaving the business in that month than's coming in. But what the business must have is some money from the previous months, or it must have arranged a loan or some investment to cover that deficit. And as we've said many, many times before, in the short term, businesses can make a loss, have a negative cash flow, but in the long term, you need to have a positive cash flow to make a profit. So we've talked about the different types of cash inflows. I'm going to put this presentation up on the VLE just to remind you, because we've got here listed the different types of cash inflows. Capital and revenue. So hopefully those of you that have done P2, this should be just a recap really. And the same with outflows. So remember, inflows coming into the business, outflows leaving the business. And when we look at a cash flow forecast, we're always talking about cash, money. We're not talking about assets, it's not a balance sheet, we're talking about cash either entering or leaving the business. So what you've also got on your sheet that you need to define is opening bank balance and closing bank balance. What you've got at the top of the page is this is a very, very basic cash flow forecast. This is how you will be setting out your forecasts. So what you can see is at the very, very top, you have income from sales, and that's for that month. So what this is, it's a prediction for October and November, and it's talking about in October, right, we're going to make £10,000, in November 6,000. No, I haven't told you how this conclusion's made, but they're the figures for these 2 months. We then look at the expenditure for that month, i.e. the outflows, the money leaving the business. And it can be leaving the business in different ways. We've got raw materials, we've got other expenses. It could be loan repayments. It could be dividends to shareholders. It could be a multitude of different things. Jay? It could be a multitude of different things. What we do then is just total it up. So you can see the total there for the expenditure. Net cash flow, 1,000. So where do we get the 1,000 from? Sophie? Pardon? Where's that 1,000 come from? What's the definition of net cash flow again? Say that again. Say again, Sophie. Wait.
Total amount of money in the bank at one time, isn't it?
Okay, it's not necessarily, it could be in the bank, it's the cash flow for that particular month of the business. So where's that 1,000 come from? Tell me the calculation that was made to get that 1,000. What was that?
10,000, and it says something for expenditure, 1,000. You got 1,000 there.
Yeah. So 10,000 sales, 9,000 costs, 1,000 for that month. So that's a positive cash flow of 1,000 for October. Okay?
That's pretty bad, isn't it?
It's just an example, this one. I mean, you can't say, can you?
Oh,
I mean, if this was my business and I've made a £1,000 profit in a month, it's okay.
Yeah, it's just...
See, so it depends on the business, doesn't it? It's all relative. So then, what we have at the bottom is opening bank balance. Now, all that is what you start with at the beginning of the month. It's just what you start with at the beginning of the month. But the key thing to have here down is the where are we? The opening balance of November is the closing balance of October. So it's just something you need to remember. When you're creating these accounts, the opening balance of the next month is the same as the closing balance of the previous. So what you can see here is we started off with £4,000. That's what this is saying. The opening bank balance is £4,000 in October. Our net cash flow is 1,000 because we made 10,000, we paid 9,000. So your closing bank balance, this is worth writing down, the equation for closing bank balance is your opening bank balance plus net cash flow. Jay, can you stop looking out the window? This is really important, okay, because you need to pay attention. I know, but are you writing this down? Are you writing all these definitions down as we're going?
I've read definitions down.
Yeah, okay, please do. So, the definition for closing bank balance is your opening bank balance plus your net cash flow. Okay, so we move on to November. Now you can see straight away that when we looked at two different years, you could see where one year was better than the other. Straight away you can see, okay, right, we've got a big decrease in income here. So this might cause a problem for our cash flow. You can also see that when you look at the expenditure, a lot of them have gone up. So your subtotal of expenditure is actually 11,000. So if we've got 6,000 income, we've got 11,000 expenditure, so that month it's a negative cash flow, it's a minus. We don't put a minus on accounts. Accounts never use minuses, always brackets. I think I mentioned this before. I think, Daisy, do you remember why use brackets? I think we talked about it before. Yeah, so why not just put a minus there?
Because people might confuse it with a dot or a mistake or something.
It could just be a dot on the page. Brackets is very clear, isn't it? It's two very large symbols, whereas a little minus could be anything. It's easily missed. So it's just worth remembering that negatives are always in brackets. So you can see that we finished October with 5,000, so therefore we must start November with 5,000. Net cash flow is there. It's exactly the same. So that means that at the end of November, the closing bank balance is 0.
That's not good.
No. Well, why is it not good though? What's
Skin.
Yes.
We spent a lot more, telling it.
What was that?
We spent a lot more.
Yeah. There's two reasons, isn't there? So the question at the bottom. There's two reasons. Expenditure was a lot higher, and income was a lot lower. The reason I put that in there is because it's pretty much always going to be the reason why. It might not be both, but in this scenario, I'll put both in there because either income might be less, so you make less, or your expenditure might be higher, so it costs more. And in this scenario, it's both.
So what are we going to do for next month? We've got no money.
They have to arrange something, don't they?
So-
They have to have a very large overdraft. You'll notice when we start doing more complicated ones that it will go negative along the bottom, and what you assume by that is that they have a large overdraft facility, or they're able to go into debt. That's a fairly introductory example of a cash flow forecast. Has anyone got any questions about any of the categories, the topics, or the general layout? Go on.
Does the closing bank balance include profit?
The closing bank balance. Well, this is what the closing bank balance is, the amount of money that you have left in the bank at the end of the month after all trading activities have concluded. We don't think of it as profit, but it could be, yeah. But what this is saying is, at the end of October, we've got £5 grand in the bank. But we paid all our bills, so yeah. It's just in terms of a cash flow forecast, don't we normally use the word profit. Okay? Right. Let's have a go. You've got another sheet in front of you. You will notice that there's a fair bit of information missing. So what I want you to do is fill in the gaps.
What kind of role? Brain. Shaking.
See people running for the calculators. Come on, this can be done in your head, surely.
I've got D in maths. It's terrible at it.
Did you get a D?
Yeah.
Do you want to do GCSE next year?
No.
Sure.
I'm positive.
Well, I do.
Absolutely
I just
hate
hate maths. I've
I've
got
got a
a
C
C bollock too much.
If you want- What I would just say is, I didn't want to put too much on you this year because it's first year and everything. Next year, you've got to grips with it all. I would recommend people with, not with C's, make them C's, or better. I really would.
I've got a C in statistics, which is maths.
It's a very small segment of maths. It's not math. Yes, it's maths, but it's like saying I can do all business, I can do marketing.
Yeah.
You see what I mean? It's only one aspect of it.
No, I don't want to do maths again. Oh.
Okay. It's the other sheet, Jay.
Yeah, I know. Just looked at it.
One of them's complete already. Okay. So, you definitely haven't done this, you know. You worry me, Lee, sometimes with the different units that you've done. It's hard to keep track.
How do you find net cash flow? Is it fixed cost minus variable cost?
Which one are we talking about?
Net cash flow.
There's no mix. Remember, fixed costs and variable costs can be out of your mind for now. What definition did you write down for net cash flow?
I swear that was 7. I swear that's 7.
Money entering the business. The other one is expenditure.
Oh yeah, no, I've written on the page.
Sorry?
The other one is the expenditure, which is the outflow.
Yeah. So you
Money
remember,
entering the business and money entering the business.
so remember, it's what your net cash flow is what you're left with after you from your income after you've paid all your expenses, your expenditure, shall I say? You alright? Done it? Have you answered the question at the bottom as well?
Oh,
There was a little kind of one further question.
So it's after deduction.
is it after they spent the money or before?
What would be the effect on the business if they had to buy a new piece of machinery in February that cost them £3,000?
What's the for the business?
If you're watching this video, you have to fast forward this bit. Might get a bit tedious just watching, listening to complete silence. Fun?
Do we need to answer it?
Yeah. It's just, I mean, it's only a quick question. Question should become blindingly obvious if you've got it right.
It gives it a range question.
Only if you've got the answer right. Only if you've got the February right, doesn't it? Others it wouldn't.
Oh, no, but you get away from that.
How we doing?
Dom, can you help with the last one?
The last one, the very, very last one.
The last one. I can't put that out.
Well, remember what I said about the opening bank balance, the same as the closing bank balance the month before?
Yeah, I can't figure out how to get to the closing balance. I'm not sure what to take away from.
Well, closing bank balance, what did I say the equation was for closing bank balance?
The sum total minus the income.
No. Well, net cash is simple. So net cash is simple. It's the same there. Exactly the same. It's net cash doesn't change every month. So what are the equation for closing bank balance? What did you write down? Closing bank balance.
Opening balance and the net cash flow.
Closing bank balance, okay, is your opening bank balance plus your net cash flow, remember?
Oh, so that's right. I made that as my opening balance.
That's it. That's right. It's really important that you do have the bits that I went through at the start written down somewhere. Really, really important. Because what finance does is, whereas marketing, I think it's a lot of different theories. Finance builds. It's like maths in that respect. You need to know the previous to know the next. So it kind of escalates. So if you don't know, for example, closing bank balance, opening bank balance, how to work those out, it's going to make it really hard when we start to create complicated forecasts.
You have to work it out because it's open by balance, do you?
Nope.
Oh,
So,
Not for the first month.
how know the opening bank balance if you haven't got the previous month?
You're always given the first month's opening bank balance, and if you're not, 0. Okay, that's the rule. Okay. Yeah. Right, we've seen the pretty much there.
What is it?
It's
What is that called?
yeah, but obviously you've got one missing, haven't you? So you need to work out what you need to go backwards and you can work it out. So obviously there are tests of logic and tests of maths in here. So yeah, like for example, it's all well and good, like 4,750, but something's missing there, isn't there? So there's a different kind of way of calculating that. This is only a practice anyway, so what we'll do is we'll talk this through, and then I'm going to get you to start to create one using Excel. And if needs be, I will do a quick session using Excel, because I want you to use formulas. Because it makes you, as I showed some of you, when we were playing around with that spreadsheet for managing information systems, once you've got the formula in there, it makes life so much easier. Because you can just drag it all the way across. Remember the little kind of cursor changes to that little black cross, and you can just pull the formula all the way across. It saves a lot of time, so we'll go through that. Anyway, right. We'll start with you, Courtney, then. So, the subtotal of expenditure. 4,250. Okay, so how did you work that out?
I did, one thing that
What, all the... Yeah, added the items of expenditure up. Right, okay. Jodie, net cash flow for January.
That will be the 750.
Yep, so how did you calculate that?
I 1, 2, 3, 4, 5. How did I calculate that?
How did you get 750, yeah?
I
What sum did you do?
added up all the expenditures
Yeah.
and then
To get that?
to get that,
Yeah.
and then obviously let's see. Of the 5 grand at the top,
Yeah.
income from
That.
sales.
That minus that
Minus that.
is that.
is
Yeah.
that.
Okay, so you're given your opening bank balance. This stays the same. Some of you got, it's just the same as the above. We put it down there again, because what you'll find is that this is obviously a very, quite a short list. It can get very, very long. So we put it in again to help you with the calculations at the bottom. So what is the equation for closing bank balance, Deepa? Okay, that's what the closing bank balance is. How do we work out?
Oh, the opening bank balance plus the net cash.
Good. Okay, please write that down if you haven't got that. Closing bank balance, opening bank balance plus net cash flow. Okay, so that's January. So we move on to February. We've got the subtotal expenditure, 4,750. Something missing. Jay, what's missing?
The average thing. Oh, yeah, the grand.
So how did you work that out?
I've got, well, that's from 4,750 in it.
Yeah.
So you add all them up, above it, and then the amount that you need to make your rest fit for it, and that's it.
The difference between. Yeah.
Yeah.
How do we know what the opening bank balance for February is, Zoe?
It's your closing bank balance in the month before.
Good. 1,750. So net cash flow is, remember, the same as here. So therefore, the closing bank balance, Leah?
£3 grand.
£3,000. So, if there's an irregular payment for machinery in February, what happens?
Then make zero profit,
Yeah.
close from zero.
You have to add 3,000 into here, and that obviously has a knock-on effect to all the other numbers. It gives you a quick insight into a cash flow forecast. What I want you guys to do now is create one. Alright? Now, it's going to be one very similar to this. So what I would recommend doing is using this as a template. So going on to Excel, using this as a template. Obviously it's slightly bigger because you can see January, February, March, April, May, June. Okay? It doesn't mention, this is what Annie was asking actually, this is a general rule. If an opening bank balance isn't given, then it's zero. You start with zero. So as you can see here, there is no opening balance. So all you need to do is using Excel, using formulas as much as you can, is to create a cash flow forecast for this. You'll notice that there is one irregular payment. There's a bonus paid in April of £2,000. So what we want to try and do is find out what the closing bank balance is in June.
I don't even know how to use it.
I don't know how to use Excel.
If you want to do it on paper, if that'll be that much easier, then please do it on paper. But I just think if you're happy to use Excel, then please do. What we'll do is we'll do an extra. If those of you that want to, we'll do an extra session for Excel. Okay.
Can I do it on paper? I mean, Word.
Don't do it on Word. I mean, well, you can do it. That'll be very awkward. Excel does.
Do I table and then just...
Let me just.
Just go into the table.
If you want to do it on Word, do it on Word. But it's gonna be awkward. I'll do a paper or Excel would be my suggestion. So what we'll do is we'll have a go at this. We'll kind of feedback and see how that goes. Then I've got another one to look at which starts to add more in. But just have a go at this for now, and we'll see how that goes.